Once I properly learned how to read and trade SPY, SPX, and the S&P 500 futures, I started to see a lot more consistency in my trading and a lot more profits. So if you're somebody who's only trading SPY, SPX, or the S&P 500 futures, in today's video, I'm going to be explaining the importance of piecing all three of those together to identify high probability setups and to build more consistency in your trading. But real quick, as always, if you guys do find value in this video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. But without further ado, let's hop into the video. All right, so I like to call this my S&P confluence system. So what we're going to be reviewing in this video is first we're going to talk about SPY, what SPY is, then we're going to talk about the S&P 500 futures, SPX, combining all of these levels, why they are key, and how we can identify high probability setups. So first, let's talk about SPY. The S&P 500 ETF Trust is one of the most popular funds. It aims to track the Standard & Poor's S&P 500 index, which is made up of the top 500 large cap US stocks. These stocks are selected by a committee based on market size, liquidity, and industry. The S&P 500 serves as one of the main benchmarks of US equity market and indicates the financial health and stability of the economy. However, these are going to be the three most important things because we're actually going to be trading SPY. So first, you can trade options on SPY. We can buy calls, we can buy puts. Now, the second thing with SPY, which honestly, I think of this more as a negative, you can only trade it from 9:30 a.m. Eastern time to 4 p.m. Eastern time. So if there's a setup in the pre-market, guess what? You can't take it because you can't trade the options when the market isn't open. And then the third thing, there is pre and post market data available, and you'll see why that's important here in a little bit. Now, second, the S&P 500 futures. These index futures can be traded using the E-mini and micro E-mini contracts, and the S&P 500 futures are among the most liquid and traded futures in the US. Now, here's the thing with futures. They're open 23 hours a day. So if you're somebody who works a full-time job or you just can't sit here when the market is open, futures is definitely the way that you want to go. Now, the other thing is with the S&P 500 futures, you can only go long or short the underlying asset. There's no option Greeks that you got to worry about. The main issue you're going to have if you're going to be trading SPY options or SPX options, especially 0DTE, is going to be that theta running against you. However, with the futures, you don't got to worry about any of that. It's just moving based off of a point system. So if you're trading the E-mini S&P 500 futures, every single point is going to equate to $50. And if you're trading the micros, every point is going to equate to $5. If you want to learn more about futures, I have tons of videos on my channel. I will be leaving those down in the description. So the main thing I like about futures, they're open 23 hours a day. There's no Greeks, and the profit and loss is literally determined on points. Now, SPX, the same exact thing as the S&P 500 futures and SPY, except a different instrument that you can trade. Now, the thing is with SPX, you can only trade options. The underlying asset is not traded. The other thing is with SPX, you can only trade this during market hours. There is no pre-market and no post-market data. And then the third thing, the options are very expensive to trade. So out of SPY, the ES futures, as well as SPX, they all have their pros and cons. However, when I am trading, regardless if I'm trading SPX, the S&P 500 futures, or SPY, I always have all three pulled up on my screen, and we're going to dive into why watching all three of these at the same time is very important. All right, so now looking at the S&P 500 futures. Again, these trade 23 hours a day. So if it's 3 a.m. and you see a setup, guess what? You can take a trade. However, if it's 3 a.m. and you're trying to trade SPY, not gonna happen. So looking at the S&P 500 futures, I always start my day off by doing my analysis on this first. And again, the reason being because it trades 23 hours a day. Now, because it trades 23 hours a day, what you're gonna notice, especially based off of pre-market and post-market data, is the S&P candles itself are going to be a lot more full compared to SPY. So this is pre-market trading all through here on the S&P futures. Now, if we were to head on over to SPY on the 5-minute time frame and we look at the post and pre-market, the candles are a lot more thin compared to the S&P 500 futures. Now, because of this, we can start getting different levels found on the S&P futures compared to SPY. I can't tell you the amount of times where the S&P 500 futures had a Fibonacci level, but SPY had a Fibonacci level in an area that was completely different than the S&P 500 futures. Now, because of that, that's why it's so important to do your analysis both on ES as well as SPY, because you can get these same levels, but they're in different areas. Or even if you trade using moving averages or VWAP, so many times VWAP is in a completely different area of price action for the S&P 500 futures compared to VWAP on SPY. So SPY might blow through VWAP, but the S&P futures might come down to VWAP and make it support. So that's why I like to have the S&P 500 futures as well as SPY pulled up and look for confluence between both of them. Now from there, it's really going to depend on which one ends up confirming the trade. So let's just say that I had a demand zone on the S&P futures, but SPY was a little higher than where that demand zone was. Well, the S&P futures come down into the demand. I'm going to be watching the S&P futures to see if it confirms a trade. And if I get the reaction that I'm looking for, that's when I'll enter the trade. Now from here, it really depends on you and which instrument you want to trade. You can trade the S&P futures. You could trade SPY calls. You could even trade SPX call. But because the trade was based off of the S&P futures, regardless of which instrument you're trading, for the duration of the trade, you have to watch this chart right here. And again, there's been so many times that I'll take SPY options simply based off of what's happening with the S&P futures. And it's going to be the same thing if we get a confirmation on SPY. So say we were looking at SPY and then SPY ended up coming down into VWAP and we noticed it made its support and it confirmed an entry for us. Well, guess what? We could look for a trade. And then from there, it's really up to us which instrument we want to trade. Do we want to trade SPY options, SPX options, or the S&P 500 future? So regardless of which one you trade, because the confirmation and the trade setup is based on SPY itself, you're going to have to watch SPY for the duration of that trade. So again, the reason why watching SPY and the S&P futures is so important is because sometimes we can get completely different setups on both of them, but what we have to look for is for a setup, confirmation, and then from there we determine which instrument we want to trade, but watch the chart that made the confirmation. And again, don't forget to mark your key levels both on the S&P futures as well as SPY. Now, as far as SPX, it's going to be the same thing, but the thing is with SPX, it does not trade in the pre-market or the post-market session. It's only trading during market hours. Now, when it comes to trading with SPX, I personally only focus on very strong areas of support and resistance as well as psychological levels. Now 5,400, because we're trading above it, is going to be a very strong area of psychological support. Now if we were to just simply pull up the S&P 500 futures or SPY, we would have no key level there saying that we are going to bounce in this area. But because we're looking at SPX, we know that 5,400 is a massive area of support. So therefore we want to look for SPX to come down to the level, start looking for some kind of bullish reaction, to then get long with a stop loss right below 5,400. Now, if we were to take this trade, it's really up to you. Do you want to trade the S&P futures? Do you want to trade SPY options? Do you want to trade SPX option? But because you took that trade due to this 5,400 level, you're going to be watching SPX because this was the instrument that confirmed your trade. Or what about this 5,300 area bounce? Again, a psychological area of support and resistance. You can see that we rejected it over there as resistance. But most of the time, if you're looking at the S&P futures or SPY, you are not going to see a reason to go long or short. You're going to have to look at SPX and identify that we are trading at a psychological area of support and resistance. And then from there, again, you're looking for confirmation to take the trade. If you get confirmation based off of SPX, trade whatever instrument you want. But because SPX gave you that confirmation, that's the chart that you're going to watch for the duration of the trade. Now, how else can tying all three of these things together help you? Well, let's just say that you are looking at SPY or the S&P futures for a short position. Let's just say in this area right here. But then you identify that SPX is trading almost at 5,300, which is a psychological support. You could logically say, hey, a short is probably not in my best interest because we're at psychological support. Or say you're looking for puts on SPY and you're looking at these three instruments. You're like, okay, well, SPY looks weak, but the S&P 500 futures are coming down to VWAP. That's potentially an area that we could bounce. So now at this point, you're getting mixed signals and that's not a clean setup. And as a result, you avoid the trade and look for something else. So like I said at the beginning of this video, if you're only watching one of these things, you're missing out on so much more. When I'm teaching people, I like to refer to these three things, SPX, the S&P 500 futures, and SPY as one big spider web. And you have to learn how to read all three of them to get a really good understanding on what's going to happen next and to identify a high probability setup. So if you are not already watching all three of these names when you are trading, I highly suggest you start right now because I can almost guarantee you that you're going to see your accuracy go way up. But that's going to wrap up this this video. So as always, if you guys did find value in this video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. Everybody have an amazing rest of your day, and I'll see you guys in the next video.